Well, good day, traders. It's been a fairly spectacular day. We haven't necessarily seen broad-based fireworks outside of the pound, that is, but certainly we've been treated to some pretty punchy news. Obviously, the first one being is that there looks like there's real scope that we're going to see a phase one deal. That's certainly what the media are saying, that it's done, that the president has signed a phase one deal, that China are committing to 50 billion in purchases of US ags. We're still waiting for Donald Trump to tweet out, but this is fact. But this is certainly at the moment looking like it's come from multiple sources, and the devil's still very much in the detail. You know, what's happening with that 15% tariff that's due to kick in on Sunday? Is that completely off the table? Is it suspended? Are there going to be other tariff rollback? There had been some talk in the Wall Street Journal that 360 billion of existing tariffs that will be scaled back by some 50%. So we're waiting for those finite details, but the market is of the belief that we are going to see a deal of some description, and that the gapping risk that we've been talking about for Monday is now sort of mitigated. The reaction we've seen so far has been pretty strong. Certainly US markets were on fire anyway, but you know, we've seen S&P futures moving up another 0.5% or so. You know, that market looks really nice at the moment. The S&P is on fire. We're breaking out to new all-time highs. The same with the Dow and the Nasdaq as well. If you look across Asia in terms of equities, we've got the Nikkei, you know, blue sky territory at the moment. We're trading at the highest level for some time. It looks absolutely beautiful at the moment. The Nikkei is one of my favourite risk-adjusted markets, up 2.4% today. Obviously, we've seen higher dollar yen as well, and I think that's, you know, clearly helping appreciation from the export side of the situation. But we've seen a Tankan report where large manufacturers are doing quite well. The outlook from businesses in Japan in that Tankan survey has clearly seen improvement. We're seeing signs of fiscal stimulus in Japan, but the Nikkei looks absolutely beautiful at the moment when we look at that on the daily chart or weekly chart at the moment. Take that time frame out. Chinese markets are doing very nicely as well. We're seeing, you know, broad appreciation across there. The ASX is up about 0.7%, getting into that sort of top end of the range, but certainly equities are doing very nicely. Our opening calls for Europe and are a little bit positive. FTSE at the moment is fairly flat. But outside of that, you know, you've seen a situation where oil prices are moving a little bit higher. Copper still looks really good. I think the idea, if we get a phase one trade deal, and actually that obviously looks like it's happening, copper continues to be one of my favourite trades at the moment. From the long side, I think there is clear economic improvement going through the world. I think if we can see convergence between these two nations, that allows that to move on as well. The other one, in which of course everyone's talking about today, is what's happening in the pound. If you look at how the pound's been performing against all major currencies, it's absolutely flying. I think sterling yen's up 2.6%, having as one of its best days for a long, long time. So, you know, we're pretty seeing massive broad appreciation for the pound across everything today. So, you know, I think that really started, and we've been saying to clients, certainly look out for what happens at 9 o'clock a.m. Eastern Daylight Time. That's when we got the exit polls. We know that was incredibly accurate in 2017 and 2010, not so much in 2015. But, you know, certainly we could see some broad appreciation or broad volatility, and that's exactly what we saw. It didn't help that at 9 o'clock we've got the rollover time as well. That's when spreads can widen. That's when we can see, you know, banks failing to make the sort of adequate pricing that you'd want to be seeing. And when the exit poll came out and showed that Tories were likely to get 368 seats, you know, that showed that we were going to see a landslide victory for the Tories, considering the market was probably looking for around 335, 340 seats. Even if we adjust 336 for a margin of safety, a margin of error, you know, you still had the Tory party getting a significant win and eating into, you know, some of the Labour heartlands. And that's exactly what we're seeing. As I speak at the moment, there's still a lot of seats that still need to come out, but the bookies are saying this is a done deal. The markets have said this is a done deal. The question is, I think in a lot of people's lips, is how long have we got Corbyn left as leader of the Labour Party? You know, some of the other key personnel may have to step down as well. We may need to see a sort of a personnel rejigging coming through in the Labour Party, and I think that's kind of the talk on the street. There's also talk that the Liberal Democrats leader, Joe Swinson may look to step down at some stage as well. So this is looking like a landslide victory, and of course the pound is obviously feeding off that at the moment. You know, euro sterling looks incredibly weak at the moment. You know, the sterling crosses are looking a little bit overbought at the moment, so you are going to see a situation where people are going to take a little bit off the top. But the way that the pound's trading at the moment, you'd be a hard person to really bet against that going forward, because now we look like we're going to have a strong and stable government in the market's eyes, and that looks like it continues going higher. Dollar CNH has come under a little bit of pressure today, and I think that's really allowed the Australian dollar to go up and test that 200-day moving average, the top of the Ichimoku cloud. We're seeing a few sellers kicking in and holding those levels, but the Aussie's been pretty firm on that situation as well. And we look forward to the new week, where equity data for the new week is not particularly prevalent, and we're looking for a situation where these markets continued moving higher. What we've seen is a situation where a lot of people were looking at drawing a rule book under for the year and sort of moving to cash and waiting for things to play out. But now these markets are moving higher again. Are we in that realms where we're going to see lower volatility and that FOMO chasing into year end? If you're an active manager and these markets continue to move up as some of these grey clouds coming out of the market, are you going to see a situation where interest rate pricing is going to come down, but we're going to see markets be driven home once again by that fear of missing out into year end?